Hey everyone. Today I'm going to be talking about Visa and their recent earnings report. I want to go through their deck, talk about some of the things that I found interesting from their earnings, some things I want to elaborate on a bit. And then after that, we're going to go into some of the media sentiment about the earnings, just showing how different numbers can be interpreted and shared differently. I always find that differently, especially interesting, especially with a company like Visa, who has a lot of industrial and consumer interest in how the company is doing. And then I just want to wrap up talking about the stock price, what I think is a fair value for the stock given these earnings, what it looks like is going to happen tomorrow, and what occurred after hours in terms of the move from these earnings. So, if you like this type of content, please be sure to hit the subscribe button in the bottom corner. If you like Visa as a stock or you're interested to learn more, I did almost a 40-minute full deep dive analysis of Visa that I'll be sharing in the description of this video. Be sure to check that out if you're interested in the company. But for the purpose of today's video, we will dive into the earnings. And I'm not going to go through every slide just for the sake of time here. But on a top line, Visa did about $8 billion of revenue in the quarter, up low double digits from a year ago. On earnings, they had a 17% net income growth and 20% EPS growth. The delta there driven by the buybacks that they've done since last year, Q1. So good to see that show up in the numbers, but operationally still a really strong number at plus 17%. Overall, before getting into the details, this is about what I would expect from the company. Usually, I expect their net revenues to be a bit more in line with net income, some operating leverage, so maybe a couple points, but the 5 points difference is more than I thought. And to be honest, the net revenue I expected to be probably a couple points higher. So interesting to see that they've decelerated a bit, but overall, I think these are the type of numbers in terms of quality that you can expect when investing in a company at the quality of Visa and at the multiples of Visa. Breaking down where they got lots of that growth. So payment volumes and process transactions were 7 to 10%. Once again, a bit weaker than they've typically been over the medium term. Usually you can count on those to be low double digits. But what really saved them was the cross-border activity. This tends to be strong when the US consumer is strong and traveling out of the country. So obviously a lot of pros and cons behind a strong US dollar. For this company, for lots of companies, one of the pros is the buying power for Americans outside of the US. So they're going to be traveling more, taking advantage of, the euro, other currencies like the peso. And typically they use their card even more when they're on vacation. So that's good for businesses like Visa. And that's probably what's helped fuel these really strong year over year cross-border numbers, even though they're sequentially down a bit, still driving the majority of their growth. Moving on into some other things that I found interesting in their presentation. What's interesting is the large drivers of volume and performance are really centered around card not present segments of their business. So you can see card present growing still, totals in the middle, but then card not present, both in travel and excluding travel, is fueling a lot of growth. So I'm interpreting this as obviously like online shopping and using your Visa cards online, but also mechanisms like Apple Pay and Google Pay and stuff like that, where you don't actually have a physical card present. I may be wrong on that assumption. If someone knows better, let me know in the comments. But I think that just kind of shows where the world's going, and it's great that they have a foothold in those types of payments too, that people don't have to have their card on them to be flowing money through Visa's network. And as long as the economics on that business and that method of payment is still attractive, I think that's good for the company. This is interesting here. A couple comments here. So you can kind of see process transactions were high teens, 20%, have been sequentially decelerating down to 10%. But some typical investor relations here. You can kind of see they put in January, so the first month of the current quarter, and they show that it upticked a bit. So it looked like they got a bit of a bounce, whether that's because the base was weaker or they actually saw a sequential increase in transactions, and they decided to put it in as a little, um, you know, a little sneak peek of how the next quarter is going to be to hopefully keep you optimistic on the stock, maybe help support their outlook, whatever it is. I always find it interesting when I see things like that, but it is truly positive to have that early read and to see that it's not just continuing to decline at least. Similar charts here on card not present versus card present. Card not present continues to grow. Um, Especially, it's interesting here. Lots of the world still dealing with COVID. Early last year, you can really see how card not present held up. If anything, took some of that share, and then has continued to be strong, even as card present has really driven um, back to where it was pre-COVID and above. So this year is interesting. It's a couple of things here. One, you can kind of see. Uh, let's start on Q4 2022. Credit and debit. Credit usage in terms of volumes is up huge versus debit, really driving overall volume growth. It's the delta's declined a bit. Now it's only 8 points in constant currency. Down here was 13. But it's really interesting to see the usage of credit accelerate. And what's interesting is the usage is accelerating, but the total amount of new cards are going to debit. So more people are getting incremental debit cards versus credit, but they're spending more money on credit than debit, relatively speaking. So it's a lot of ways to unpack that. Is the consumer globally weaker and they can't afford to pay for things now, so they're putting it on credit? Or are they just leveraging like points and cash back on credit that you don't get with debit, or wanting to keep their money in high income savings accounts throughout the month, pay it off at the end? I hope that this is just a sign that consumers are getting more financially savvy and not that they're taking out more debt at 20-25% interest rates. But that's just an interesting trend that we're seeing in terms of the usage of the cards. Now, they have their revenue mix here if you want to pause the video and look at it. I personally, like, generally speaking, you have a pretty good sense of how Visa makes their money one way or another, whether it's on the back end or the front end. At the end of the day, they're getting royalties off of dollars going through their network. So I don't really get fixated on the splits too much. Client incentives is one that's usually good to look at as a percentage of revenue, because that's just like a core element and cost of their business. So 26%. But I really like looking at the expenses as they try to drive scale on their operation. One thing that really jumped out is litigation costs went up 130%. Lots of these types of costs tend to be very volatile. So I'm hoping that this is like a more of a one-time cost, and next year as we lap this period, this $340 million is a lot lower. But it's really incredible to see, from personnel to marketing to everything else, total expenses under $3 billion for a global network that did $8 billion in the quarter. So it really just shows how strong their model is and their economics are. And they're just poised for continued scale and margin expansion behind kind of their expenses being so low relatively of cost, of course. And then the last thing in the presentation, I just wanted to talk quick: free cash flow. One of the reasons I love this company, I talked about it more in that video I was alluding to earlier that I did a deep dive on Visa, but they did 4.2 billion in cash flow, spent 250 million of it on capex, about 5%, 5-6%. Really, really low in terms of the absolute cash that they made in the quarter. So $4 billion of free cash flow net after capex. What do they do with that 4 billion? Do they go and they acquire a new up and coming fintech company? No. Do they make investments in new technology or things that have no line of sight to having a return on investment? No. They literally turn around and they give 100% of it back to shareholders through share buybacks of 3 billion and dividends of 1 billion. This is why I love this company and why they're such a strong compounder, because they just continue to realize the value of their network over time. They know it's going to increase, and they are proactively increasing the share of the company that each of their shareholders are owning by buying back more of the company. And they're giving you a little on the top as a dividend, albeit a small dividend on a per share basis. I just want to touch on the balance sheet for a second. Nothing overly notable. The one thing you can kind of see, cash dropped a couple $1 billion and all of assets dropped very slightly. They did have $1 to $2 billion of debt come due this quarter, and they just decided to wipe it off the balance sheet. So you can kind of see debt also decelerated, 1.5 billion on total debt, about 1.5 billion on current liabilities as well, as they kind of just said, now we have higher interest rates. Let's just get rid of this debt. We have the cash to pay it off. Why do we want to pay whatever it would have been 6% interest when we have the cash sitting here in like treasuries probably? So that was, I think, a prudent decision probably. In the grand scheme of this company, it's not a big deal, but just worth noting, they still have a pretty strong balance sheet, not a crazy amount of debt, given the market cap and the EBITDA that this company spits out on an annual basis. Now, I wanted to pivot into some of the media outlets' reaction to the earnings, and I just picked two, just as a lesson or a learning to be careful what you read and make sure to actually read the articles. Don't go just hunting titles. So on one end of the spectrum, there's an article here, and there's lots of articles like this on Visa earnings beating expectation thanks to overseas spending. True, like technically true. And then other articles stating Visa revenue growth slows more as tough economy sober spending. Somewhat true too, depending on how you want to read the report. The revenue growth did decelerate, but the earnings did beat. So you can spin the data in different ways and give a much different feel to an article. And it leaves the reader leaving, or the investor leaving, with a very different taste in their mouth about how the company did. So whenever you're reading real-time reviews of earnings reports and stuff, be sure just to, scan all the articles that are out there. Don't just take the first one, because you may be left with the wrong picture or the wrong message. Going into the stock. So the stock after hours went up about 1%. The market, I'm not sure what the market's going to do tomorrow, but I bet you, based off of the earnings, it'll probably be relatively flat, maybe up 1%, 1.5%. But these earnings were very expected, I'd say. Probably a bit higher EPS than people were expecting, a bit lower organic revenue and payment growth. So I call it kind of a wash in my mind. I really don't think this stock's going to leave the 220s tomorrow unless there's a broader market move. And I think that the stock today, based off where I think their earnings are going to come in for 2023, and where I think they deserve to be trading on a multiple, is in a good spot. I think the stock can go up to 250. So I think there's, 10% upside, somewhat limited downside given the resilience of their business model and their profitability structure. So I think the stock's in a good spot here, but I also am cognizant that there's a lot of other opportunities in the market that may have larger upside. So for me personally, it just depends on what I'm seeking to grow in my portfolio. I did add more Visa shares earlier this month when the stock was down in the 205 to 210 range. And right now I'm really trying to focus on more dividend growing stocks or dividend yielding stocks to bolster the dividend income in my portfolio. So It's not one that here I'm jumping into like crazy, but if the stock trades down back to where it was before, I think there would be more upside on it for me. I still like it here. I just think for me right now in my portfolio, there's a couple other areas that are a focus area for me, at least the first little bit of the year here. So I'm not going to be specifically looking to buy this finger on the trigger at 9:31 tomorrow. But I think the stock's in a really fair spot given the upside and the downside from here, given their earnings and their business. One thing I just wanted to leave you on, and this is just a slide from that broader Visa analysis video I was talking about. When it comes to um, returning capital to shareholders, Visa does it so well through share buybacks. I think they're currently now, after this last quarter, at 2.1 billion shares. So they've bought back over half the company over the last 12 to 13 years and have increased the value of the company like tenfold. So you own, or 5 to 10 fold. So you own double the amount of the company, and the value of the company is up 5 to 10x. That's a really powerful equation and model to keep fueling to create long term shareholder value through capital appreciation while increasing your dividend every year. So I really like this stock. You're paying a pretty healthy multiple, but I think it's deserving of it. And it really just depends what you're looking for in your portfolio. If you're looking for a long term, stable growth stock that also pays a growing dividend and that you can sleep well at night, I think Visa is a great add to the portfolio. If you're seeking higher yields right now, it obviously doesn't fit that mold. So really just depends on the person. That's all I got for you guys today. If you own Visa shares or you're interested in the company or any comments on their earnings, would love to hear from you in the comments. If you like this type of content, please hit the subscribe button. I'd really appreciate it. And also like this video if you liked it. That really means a lot to me and helps me grow the channel. I'll see you guys next time. Bye.